Good afternoon, Chris Tuttle. How you doing?
I'm doing pretty well, Ben. You scared me into buying back some of my spy puts that I sold this morning, but they're right at where I
Okay.
sold them, so it doesn't really matter.
Well, let's see. Maybe at the end of the show, if we have time, we'll talk about the indices a little bit. But last week when we talked to you, APRN, you were really bullish on. I think they spoke at a conference. I think it was in between the presentation and then you were going to talk to management in the afternoon. And since then, it's just exploded. So let's start there. So great call by you last week. We've been
Yep.
in this and we've started shaving a little bit off, but tell us what you think and where it's going.
Well, I did meet with them last week at the Canaccord event and did a follow-up call. The issue on APRN is it's just way too cheap. I don't think people quite understand what they're looking at. This is the company that now has, 30 million in cash, no debt. They're going to do 410 million in revenue this year, 25 million in EBITDA. It's like a $50 million market cap. So it's too cheap. I think there's a lot of moving parts. I think earnings could be better than people expect. But the one thing that was a worry, you might recall, was the ATM. They do have I think they have 66 million left on an ATM that I talked to them about, and they're not withdrawing it. But I think one of the things that people have come away with in the last couple days is that they were not likely to use it anytime soon. That is probably not in 2023, unless the stock went into double digits or something like that. Then maybe we need.
So let me just challenge you on the cash position because I don't have the math in front of me, but I remember after they did all the wheeling and dealing, that 30 million cash, isn't it now substantially less than that after they had to pay off some other debts with that 30 million, and then also they've had some burn since that deal? Aren't we probably closer to 10 to 12 million right now?
I don't know. I mean, the short answer is no, I don't think so.
Unless I did the math wrong. Okay.
There's also, I think they do have that level of cash right now, and I think they're in a position. They do have some rebates and earn backs or earn outs, if you will, that they can get out of this agreement that could add to cash. They also have lease back revenue that's going to be coming to them on a quarterly basis. On a monthly basis that I'm not sure everyone's factored in yet. But the net of it is they've got that cash. They don't need cash. There's no reason for them to use the ATM unless they did something. I don't think any of us want them to do anything.
So unless they did something, are you saying they're cash flow like neutral at this point?
Well, no, they're still going to lose. They're still going to be cash flow negative for a while. So they are not. I would say they're past the point of needing financing unless they make an acquisition of some sort. But I think what we'll see are improving numbers, improving profitability. As you probably are aware, they are not, they're not out there marketing to get new customers because they're focused on customer profitability. And, they're effectively, they're not raising prices all the time, but they're effectively raising prices by the way they, just kind of the way they handle the website and, how their customers are buying their product.
Did you talk to them or did they mention the money from Joe Sandberg?
Yes, they are owed money. He does not have the money, so they're not suing him, but they are, what they said is that they are working with Joe in a cooperative way to try to liquidate some of his assets so that he might be able to give them some of the money he owes.
And is that main asset there's some sort of green energy carbon credit trading company that they're trying to go public via SPAC? Is that the main asset that they're trying to get the money from?
I don't know, Ben. I put a line through that and
Mm-hmm.
said it's a zero. Um, if it, if whatever happens comes in, great. But um, I basically exclude stuff like that from
Mm-hmm.
my analysis. As long as
Interesting.
it's not a liability for them, I really don't care. If they, I mean, be nice if they got the money. Don't get me wrong.
Right.
I'd love to see them get it, but that's not something that I'm gonna include in my analysis.
Okay. So then how are you playing it from here? Is this a
Um,
riskier position, larger position,
I
smaller
mean,
position? And
I
what's your
own,
target?
yeah, I own a pretty good amount of it. I kind of think it's worth like $20.
Oh, wow.
I did sell 10% of my position yesterday just because of just because of how big the move was.
Mm-hmm.
Let's see where I forget what my basis is, but apron. Yeah, it had a heck of a move. So, I do this a lot of times. I'll just take 10% off. And I'll buy it back, if it dips or, if we get, like as you pointed out before we started the show, it's volatile out there. And some of the stocks I own, I've sold, bought and sold pieces of them like 6 times in the last 6 months. But yeah, I own it. I don't have any plans to, I'm going to watch this play out, essentially. So, I think Fresh Realm is interesting. You all circulated that memo about Amazon being involved in Fresh Realm. I don't know whether that's true or not. It certainly makes sense. They hired a very senior guy from Amazon who was in charge of some of their meal delivery and food business. So he knows what's what. It's unlikely that he would have gone to Fresh Realm if he didn't feel secure in their position vis-a-vis Amazon. So I think it's a good category. Like I said, some people, can find things they don't like about Apron. They have an interim CFO. They need to hire a new CFO, but it's just too cheap. I mean, it's just too cheap. So that's why I own it. And if they can actually execute, then it's going to continue to.
All right. Sounds good. We got a piece of this. We did sell some yesterday, even some today. But I don't know. You're giving me some confidence that maybe we should have a larger position because I've kind of categorized this as very high risk with potential of an offering.
There's also, don't forget, there's also a short position on this thing. It is a very attractive stock for a potential short squeeze because it's a consumer name. It's
27. Is this right? 27.6% of the float is short.
Yeah, that certainly could be. I don't know how up to date these numbers are.
Wow. Let me
but
see.
Yeah, it's it's a great stock in that regard. If folks decided they wanted to run it and really squeeze the shorts, and then God forbid, like Apron announces some sort of deal or distribution deal, and it attracts some retail interest, and then they start sniffing out a potential short squeeze opportunity. That's another reason you definitely want to, I think, have a little, own a little of the stock, even if you don't want to have a full
Look
position.
at that. It is. It's 1.2 million shares short out of 6 million. Oh, wow. I did not realize how big this short position is. Wow. Okay. I hope my partner's listening right now because maybe we should juggle things around and make this a larger position. Thank you, Chris.
Okay.
Great interview on Apron. I think you've just increased my conviction on it. All right. Let's move on to see. I gotta find him. I hope he's listening. All right. I like it. I like it. Okay. Let's move on to VTSI. VTSI, this is one I've been very familiar with for many position personally, as far as like story trading goes. We gave a buy signal yesterday after the earnings report. They beat on the top line, beat on the bottom line. I had thought that the bookings were kind of light, but I saw some conversation in our community that people thought, no, that's not true. The bookings were good. I'm not sure what I was looking at there, what they're looking at. But also the CEO change, I think, very significant. So what's your take on it?
Yeah, I like you, Ben. I've known this stock for a long time because was super impressed with their technology. However, it was languishing under like the visionary CEO founder. The new guy Givens has injected a whole attitude around execution, like actually delivering orders to customers in a timely fashion. So, and building facilities where, the customers want to be. So, I think it's a great, not only inflection point, but also I have to tip my hat to the founder CEO, who recognizes, what has gone on for the last 6 months and realizes, it's time for him to keep doing what he's doing, but get out of the way in terms of trying to do things that he's not good at, which is, run a company operationally, which I think now we're into that. I think he's just going to keep doing more of the same. They're working hard to, do a bunch of facility stuff, but their product and production lines are running like flat out. So he is, responding to fill demand. And, I think the second quarter was sort of the confirmation that the quarter prior to that was not just a fluke. And now we're going to see a string of, solid operating results from this company.
So do you know what's going on? I don't know. It was somewhere. I thought it was in the press release or in the conference. There was like a booking number that seemed like it was down sequentially from last quarter. Was I wrong about that? Because I put that out there in one of the chat rooms, and people were like, no, Ben, you're wrong. The bookings were good. Did I see something? Are you not concerned about that at all? Or?
I think what you're saying is correct, because someone put I'm trying to look at it right now, but someone just put like their historical bookings up, and it wasn't out of line with anything that it wasn't out of line or alarming in any way for me.
Okay, but that was the only thing. That was the only reason I actually didn't really slam it hard yesterday. Like we picked up some at 7.
Yeah.
But we are more on Quick. I don't know if you follow Quick at all.
Yeah, I've owned Quick in the past. I wrote it up for a while, and I don't know it that well, so I didn't have the conviction to own a lot.
If we have time, maybe I'll catch you up on what happened with Quick.
The thing with VTSI they did have a huge expansion in their accounts receivable because they moved to a new ERP system. So some analysts were like asking about that. It's absolutely not an issue like whatsoever. So
okay, so let's go.
So anyway, VTSI, I think it's going to keep motoring forward. I don't have a specific target on this stock, but it's closer to 15 than it is to 7.
Yeah. All right. So let's talk a little bit about the price and maybe valuation. There was an analyst yesterday that's close to what you're saying. I think it was Roth MKM Partners. They increased their price target from 12 to 14, roughly, something like that. And here we're at the 50 DMA, which is a key level. If it breaks and stays above 750, I think we could challenge the 52-week high there of 850. So you're more in line with this Roth MKM. You think it's worth like 15 today, and you're holding tight here, even if it like flies to 850 tomorrow. What are your thoughts on that?
I would hold it if it went to 850. I have some options I would probably sell if it went to 850.
Ooh, options, man. All right.
But the thing with VTSI that I think people should keep in mind is, you've got what you can see. which is great, and I think will ultimately support a $15 stock. But the other thing to realize is like VTSI has like been around forever, and that means they have a ton of intellectual property, of content, of patents. They have a lot of material around, virtualization and augmented reality and extended reality and all that sort of stuff, which is very critical to applications in military and government and aerospace, police, etc. So I think there's, I think there's value to VTSI also as an asset that is difficult to put a number on it. But if they continue to execute and monetize that, we'll see how it goes. We'll reevaluate if and when it gets to 15, in terms of, what else can they do? What other tricks do they have in their bag that they can produce?
Yeah. And they're debt free, right?
They are.
They're debt free. How much cash do they have? I'm trying to look it up. If you know, let me know.
I don't think it's
balance sheet cash. Okay, looks like they have $13.3 million in cash. 13.3 million cash, no debt, and are they cash flow positive as well?
Let's see. I would have to pull.
They have net income. They've had net income.
Yeah, I mean, the other thing they said on the call that you might want to know is that they've been making a lot of capital investments, and what they said on the call is that the bulk of their capital investments are now behind them.
Yeah. All right. They're cash flow positive. They have no debt. So this is an interesting opportunity. I think it's a very safe stock to hold, I believe, because you're talking about $40 million in revenue if you analyze this last quarter. And if you back out their debt here from their market cap, you're talking about like a EV to sales ratio of like 1.7, 1.8 in a profitable company that's growing. This feels like a safe company to hold. In this environment.
I would put it in the safe category for sure.
Yeah. Awesome. Okay. So we're looking for 15 or so in VTSI. We're looking for 20 in APRN. Now, GNSS, we've talked to you about this before. I don't know if in great detail or not, but there's been a number of catalysts and press releases over the last couple months we've seen coming through. They had earnings last week. So give us your thoughts here on earnings and the price action, where you think it's going.
Yeah, I mean, I'm a long-suffering Genesis shareholder. I really love the technology that they have. I think most investors would agree that they have under-executed in terms of growing the software business the last 6 quarters or so. So there's been a fair amount of disappointment in the stock, which is why, other than like the recent little move that it's had, it's at least for me has been like kind of flat. But having said that, there were some glimmers of significant progress in this last quarterly report, in that although they did not announce it or say who it is, they did win a state of some sort. They're, up until now, their wins have been counties and companies. And, that's great, but a state is a lot more attractive and points to broader adoption and bigger contract sizes. They did win the Saudi Aramco deal at the very end of last year, which is like the biggest deal that anybody has seen in the space. And it did just go live in the last quarter, so we'll begin to see that.
So, let me ask you something. I saw this press release, and I covered it on our show, GNSS, on one of our shows. I think it was a 1 p.m. update, and someone from YouTube said, "Hey, what about GNSS?" And the reason, I think I put it out on one of our morning shows when, again, the ER came out. On the press release, under business outlook, it says, "While our hardware pipeline continues to grow, delays in closing associated orders continue to challenge this year's revenues. As a result, we're realigning our resources accordingly. Genesis expects fiscal 2023 to be down from fiscal 2022, with fourth quarter revenues approximately 5% below the prior quarter. I saw that and I avoided the stock, and apparently I was wrong because the stock just like shot up. So what did I get wrong? Was there something in the press, in the conference call, that canceled that out? I mean, it went from 260 to 323.30.
That's what I'm saying, is they want to state.
And that was mentioned. That was mentioned on the conference call, or was there?
Correct. That was mentioned on the call.
Okay.
Saudi Aramco is live, and it was only 1 month last quarter, so we'll start to see that every month in prior quarters, in subsequent quarters. And most investors are aware of the fact that Florida is reevaluating their Everbridge contract, which is a monster contract. Genesis is absolutely bidding for that, as are quite a few other companies, including Motorola and BlackBerry. And nobody knows how that's going to turn out. But here's my thing, right? Is, the company's kind of been left for dead. Nobody really, is excited about it. However, they did win and deployed Saudi Aramco, which is huge. They've won a state that they haven't announced yet, so we don't know what it is or how long that's going to take. And let me put it this way: I don't see a lot of downside here. And if they do nothing, like if it's steady state here, I think the stock works higher this year. If they won Florida, it's like a $12 stock. So, I'm not going to say like
they won Florida. It's a $12 stock.
Yeah, I mean, Florida's big, and that's just the beginning, right? They win Florida, they'll be on the front page of the Wall Street Journal, and God knows how many other contracts they could win. Now, listen, there might only be a 1% chance they win Florida. I don't know, because there's more. This is more about campaign contributions, bribery, and who has the best pornographic pictures of government officials than it is.
Is that how they win? Is that how you win government contracts?
Well, depending on the state, yes.
Oh my gosh.
Certainly in some of the states I've lived in, that's how you win. I'm not kidding, by the way.
I believe you. I believe you.
Having said that, you know what?
Genesis, very naive. I used to be
Genesis
very
has. If Florida were going to decide on the merits, Genesis would win the deal hands down. If they were going to decide on the merits, which, if you want to believe in merit in the government, then you want Genesis to win this. And if you want to, I think you're buying Genesis here for at a somewhat depressed level in the business with a free call option.
You're intriguing me, and we don't have time to do a deep dive, but I remember I looked into Genesis briefly. I think it was during COVID, about some sort of camera system for school buses, right? Wasn't there something about that? Like tracking the safety of kids and buses and cameras.
I think you might be thinking of a company called Gatekeeper Systems.
I messed it up. Oh, that's Gatekeeper Systems.
It's all right.
So, okay, can you summarize really quickly? Like, what do they do? I'm reading this company profile, and it doesn't mean anything to me.
So they've got a platform that does, the first thing they do is mass notification. So that's where a big storm comes in, or an active shooter starts shooting, and you get a little thing on your cell phone, a strange sound that says, hey, there's a big flood, or hey, a child's been kidnapped, or hey, there's an active shooter. And then they also have a whole set of offerings that they acquired years ago that used to be called Zone Haven. But what it does is, all those people in Maui that burned to death, a lot of them burned to death because they didn't know where to send them. They were like, where do we send them? We need to evacuate them, but we don't know where. So Genesis, their system basically gives all the first responders the tools to communicate instructions and route people to safety based on where they are, where traffic is, where the hurricane or fire is moving.
Wait a second. So this event in Hawaii, that could be a big kind of sentiment booster for the stock, and also in terms of a catalyst for governments to say, hey, we got to upgrade our system after what happened in Hawaii.
It might help. I mean, I'll send you a link. It'll be a free article, but I'm publishing an article on the Maui disaster and how sad it is that as a country, we're spending all this money on electric school buses, but the vast majority of the country won't have this basic public safety software, for what amounts to a very small amount of money. And first responders don't have these tools. It's aside from the investment case, I'm pissed that once you see how well this works, and I've seen demos of it in places where it's installed, it's really frustrating that we all don't have that in the places we live, because if something happens, you're not going to know crap and no one's going to be able to tell you anything. And that's not good enough for us.
So very fascinating. Look, I missed Genesis for the same reason. I guess you didn't get on quick. You got to get on the conference call, and you got to know what's important on that conference call. So Quick had like a major miss on their top and bottom line, and the stock rocketed because of a contract that they won that was mentioned only on the conference call with no press release, which I think is like a sin. I don't know how you do that. But in any case, what's your price target or fair value estimate on GNS?
I mean, I think it should be 7. That's kind of where I have expected the stock to be all year. If any of these deals close or are positive for them, like something like Florida, obviously you can double it. Florida is a big contract, and it would lead to more.
So they're saying on the conference call they won a state, but they didn't say which state.
That's correct. It's not Florida because Florida hasn't done theirs yet.
And how come they haven't announced it in a press release? What are they waiting for?
Well, you have to have, it's the usual, right? You need permission. And I can tell you that I just talked to someone at the company yesterday. Like some of their, a lot of these, there are people involved in these contracts, like firemen and stuff like that, and they are adamant about not wanting references or photographs or anything out there about their first responders and all that. So I'll find out more about what the timing might be, but it's good news. It's progress. And so the company continues to make progress. I've owned it for a long time. I think the solution is unusually good, better than what's out there, and will keep getting adopted. If states start doing it, we get a big accelerator, and that's, that I'm not forecasting that, but we'll see.
Sounds good. I will have to move GNSS up on my list. I maybe I'll have to get it. We'll have to research it. I'm not in it now. Okay, cool. Last one, DCGO. We've talked about this before. They had a nice little press release yesterday about some launch with some insurer or something. No, I don't see it. I saw it. There it is. Emblem Health launch. That was yesterday. They had earnings on August 7th. It was mixed results. EPS missed. Revenue beat by a nice little margin. So all in all, the stock reacted well since earnings. Gapped up. You can see that. So what are your thoughts here on this stock now?
There are two main things. I think investors are now relieved that the first half's done for them. They've been saying all year long the first half's going to be not look great because of difficult comparisons due to COVID testing last year. That's done now, and so now they are going to be able to produce accelerating growth and expanding margins based on the their mix of business. So investors are like, okay, whew. So that's one thing. The other thing that's probably less appreciated is last week at the conference, they talked about something new that they didn't really cover in their June analyst meeting, which is something called gap coverage. They're now providing that to a number of healthcare plans. It's small right now, about 75,000 lives. But I can tell you without, getting into the rat hole here, because we don't have that much time, but health plans and everybody in the world really struggles with a small number of people that don't go to see their doctor, essentially. So, and And health plans are desperate. Like, what are we going to do? We're not going to see this person until they show up in the emergency room dying, and it's going to cost us $1 million. So what they've done is they've done a deal with DocGo, where DocGo is going to take over these people, and they're going to go out and they're going to say, hey, we're here to do an eye exam to see if you're at risk for diabetes, where you might not be able to walk in 6 months. And we're going to do a PCP exam, and we're going to do a video meeting with, a doctor after we take your vitals. And they're going to get, they get paid for that. But it's a very, it's a very good application of, what they've put in place as infrastructure. And I think the light bulb goes on a little bit when you say, oh, wait a minute, these guys just have an infrastructure over which they can deliver all these different kinds of healthcare services and, get increasing profitability out of it. So, I think these are pretty constructive positives for the company as we get through, into the back half of the year, where they're just going to be putting up better numbers and, proving out that their model is very effective to large health plans.
All right, sounds good. DocGo $9.98 now. You think there's an opportunity here at these prices? What's your price target? Any upcoming catalysts?
I mean, I don't see any upcoming catalysts, so I know that's disappointing. I mean, I see the company with $1 in earnings power and, maybe a slight market premium, so like $20.
Yeah, I hear you. Okay, I get it. I get the story. Maybe not as attractive as the other three.
There's no like low, nothing's going to happen that I'm aware of in the near term on DocGo. We're just going to have to let it play out.
Good, interesting company. They're doing well. Guys, if you want to follow Chris, you can go to IPO Candy, sign up for his newsletter over there. And I want to remind everyone, 1 p.m., I got to take a little break and set up 1 p.m. We have a public YouTube over at youtube.com/storytrading. We'll update what's going on with the market, with SPY breaking down, RK breaking down. Not looking pretty right there. And then we'll go over our morning picks as well. Just real briefly, Chris, let me just show you guys what we talked about this morning. Yeah, this morning it was VTSI was on our list. It's not green today, but whatever, it's okay. VTSI, Quick, LAP, Yatra, KMDA worked out. So that was our list this morning, on top of perhaps shorting the market, and the shorting the market part's working out. So, all right, Chris, thank you so much. We'll see you next week.
All right, Ben, thanks a lot.
Take care.
Talk to you soon.
Bye-bye.
Goodbye.